And it, of course, makes an excellent segue to our next session, where we're hearing from Amundi experts. Thank you. Hello, gentlemen. Welcome. Good to have you here. I have Jean-Jacques Barbéris, Amundi's head of the Institutional and Corporate Clients Division and ESG, and also Yerlan Syzdykov, Global Head of Emerging Markets. Thanks for being here. Now we're going to dive into some of the topics that we've touched on over the last few minutes. Emerging markets, they play a critical role in the energy transition. We've heard that. But what are your thoughts regarding climate financing needs in emerging markets, and what challenges do you see at the forefront?
Sure, yes. I think if we are really serious about 2050 and net zero and energy transition, we really have to focus on emerging markets. Already the previous speaker was saying exactly that. We really need to help the largest economies like India, China, to really help them to transition in energy. So I think this is really, really important for us. And we need to really look at the trends in emerging markets where we still have growth, population growth, we still have industrialization, urbanization on the emerging market side, and we know this is carbon intensive. So we really need to tackle that. And of course, we have significant achievements in that. We have been able to really bring more funding into emerging markets, but it's still a far cry from what we need. So globally, we need about between $3 to $6 trillion of funding per annum going into 2050. And if you look at last year, we only were able to mobilize $630 billion, which is a far cry what we need. And half of that, just under half of that, $280 billion, went into emerging markets. So it's not really enough. So we really need to mobilize more, and we really need to create more opportunities as fund managers for investors to invest. We really need to also have banks, intermediaries, to really create more instruments for us. We know there's a lot of instruments already in place. And we, of course, need, very crucially, a very important point also raised by a previous speaker, we really need to work with regulators, because the current framework inadvertently created disincentives to invest in emerging markets, despite the fact that the intentions were really to tackle greenwashing. So I think we really need to look into it and really encourage all of the market players, all of the global stakeholders to help us.
You talk about the gap right now. In fact, Jean-Jacques, there's a conference underway in Paris right now, a climate finance summit led by President Emmanuel Macron, who said yesterday we need public finance shock. But we heard the amounts of money that we need to fund this transition. How can investors address the financing gap and fund climate change mitigation and adaptation? And how do you integrate the social aspect that Carrie was just touching on?
No, I think it's interesting to see that at the moment we're discussing the topic, you've got 50 heads of states that are designing a new financial architecture for climate transition in emerging countries. I'm not entirely sure of what the outcome of this summit will be, but what I'm sure of is that it's going to reiterate once again, and it has always been the case since 2009, that the fact that the private sector mobilization is going to be crucial. Mm-hmm. Since, when you look at the figures, basically at the moment, you only have 0.54% of the 1.3 trillion needed every year to achieve net zero objectives as a whole in emerging countries. So therefore, we're not there yet. But I think we can be optimistic for a number of reasons. First, because all of us were more and more, I would say, motivated by impact, and the most impact we can generate is in emerging countries. Second, because we see more and more instruments that are progressively cannibalizing the traditional asset classes to deliver what is needed. Last year, cumulatively, it was 3.8 trillion of social, green, sustainable linked issuances. And finally, more and more public authorities understand that it's not only blended finance we need. What we need is to integrate the challenges into the traditional asset classes. And I think this is the new frontier for the financing of the transition in emerging countries.
You make an interesting point there that the most impact can happen in emerging countries. But how can investors then play the opportunities the transition offers, and what sectors look most attractive?
Certainly, from instruments level, of course, we know already there's a lot of instruments like green bonds, so like sustainable bonds. We have pioneered now blue bonds, which obviously help to preserve our ocean and also representing an opportunity to support our biggest carbon sink. So I think in terms of opportunities to invest, of course, we are creating opportunities as asset managers. We have climate bond funds, we have green bond funds, we have net zero funds, we have Paris alignment clause. There are plenty of opportunities for all of us to invest in these funds. Of course, in terms of areas of investment that we really need to focus on, we also need to take into consideration the social impact, as we were discussing in the previous section. So we can really have an affordable technology. So I think we can all talk about hydrogen, which is really great technology, but it is expensive so far. So for me, number one opportunity to invest from sectorially would be from coal to gas transitions, which is low-hanging fruit. And for the countries which have a very significant coal in their energy mix, this is going to be a really big step forward towards decarbonization, like China, India, South Africa. So I think this is very, very key. Of course, we have traditional areas of investments, of course, on renewables. And of course, we are also looking at other areas of investments that will allow us also to offset some of the impacts that we discussed. Actually, one of our breakout sessions was actually focusing on offsets. I think there's a new emerging area of investments which also will help us to decarbonize.
Can you elaborate, Jean-Jacques, on the potential impact of integrating net zero targets into investment portfolios, and what implications should investors take into account?
I would like first to say one thing. I think net zero is not a concept anymore, not an abstract trend. It becomes a material reality in more and more portfolios. And since last year, I would like to thank all the investors that are within the room that have asked us to manage their money with net zero objectives. There are a number of you in the room. For those who have not started yet, we're here to recruit you.
And that's a real shift.
Yes, it is. And I hope that will going to happen more and more. So it's a little call to action on that front. But we shall be very clear on the fact that there are some consequences associated to that. Even if from an historical performance point of view, we do not see, I would say, material impact, still, you've got an impact, for instance, in terms of tracking area budget that should be allocated to a net zero portfolio vis-à-vis a traditional one, for a reason that any investor could understand, is that at the moment, the real economy is not net zero oriented. So by definition, there is a delta that is associated to that. The second element that needs to be taken into account is, of course, some sectoral, I would say, biases that can be embedded into that, but some could be positives, such as the one Yerlan were mentioning. For instance, it is possible to integrate into net zero solutions dedicated exposures to some contributive solutions to the transition, which can be also a way to capture, I would say, more performances going forward. But all in all, what I think and the message that I would like to share is that this is doable, this is practicable, this is something that is manageable from a risk perspective, so it means we can all do it, so just let's do it all together.
Thank you very much for those final words from our Amundi experts here on this round table and insights on the energy transition. Thank you.